The following is an excerpt from an askSlim member video. Subscribe to our channel on YouTube and share it. We put tons of new videos out every week. Like this video, give it a thumbs up, and follow us on Twitter at askSlim. Email matt@askSlim.com and request a demo of our technical analysis services, trade planning tools, and amazing video workshops. Our services support all trading and investment styles. Please do enjoy this video. What we're going to do now is we're going to switch over and we're going to go to the daily chart and we're going to go to the /CL for light crude. I have this set up on I hope I have it set up on 2-year, right? I do. So now I'm just going to come in closer right here. This is really interesting. So for the week, we get about 80% credit. I don't get a lot of credit for CL, but I get a lot more credit for the other markets, which were pretty close to what we thought were going to happen. Now, CL, we were looking for a bigger dip, but there was no dip in here, really. I mean, the market did fall, but not by a whole lot. The peak right over here was up at around 34.75. The decline right over here was only down to about 30 and a half. So that was extremely narrow range, as you can see. Momentum still quite strong in here. This cycle corrective period gets you nothing but sideways action. That's positive. I actually have it drawn to only get back up to this 35.40 area. You have the 89-day moving average coming down over here up into the 37s. So we're going to project it to get over $35 again. When we look at that, we're going to call a range somewhat narrower than or higher than we had it before, where 35.40 being the top of the range for the next couple of weeks. The bottom of the range being at this area here, around 28.25 at that top of that support. And pretty much stuck, we think, in that kind of a range after a big improvement. We had looked for the markets to get nervous back while June was still on. As the May market, we saw that collapse to negative territory. But that didn't really happen, as there was a little better numbers coming out as far as the supply-demand situation, and also the storage situation alleviated a bit, so the market never got nervous again. And we think that that time is going to come a little bit further out there. So the sum of the evidence is that it's still in a range. The odds are pretty high that in about 2 weeks or 3, it will begin to turn down again for a bigger intermediate correction. So the upside, downside right now we see as minimal. However, risks picking up starting in after a couple of weeks.